Ladies and gentlemen of the crypto space, we're live at 11:29 a.m. January 21st, almost towards the end of the month. We're post inauguration, and the story that we thought was playing out, it is playing out, and that's the most important thing that I could probably tell anyone. Trends continue until they stop and reverse. Unless the story changes, you don't take action. And the whole title of today's stream is Fundamentals Tell You Where to Look, Technicals Tell You When. And fundamentals, if the story is a fundamental, the fundamental properties of a particular project, unless the story changes, there's no logic or no rational reason to take action. Now, clearly, there's a degree at which technicals override and force you to make a rational decision. Um, but then you could always argue, just like the Winklevoss twins do, with a 200% annualized appreciation on Bitcoin, the dip from 2017 from 20K to 3K compared to what it was the year before in 2016 and 2015, you're killing it. So over a 10-year period, you got 200% annualized returns. That's the story. That's empirical fact at this point. That's the price action performance of the asset. So if it rips to 100K and it dips to 50K or 40K, and you bought it at 5K or 10K at the beginning of 2020, come on. Come on. And I saw a bunch of tweets this morning. I just responded to a couple of folks. Gold, of all people, gold bugs talking about gold, saying over the last 6 years it's dipped like 20%. Yeah, but Bitcoin's been up 200% annualized per year over those 6 years. So the gold bugs, which are really the largest, longest term macro folks, don't even see what's in front of them. And I don't know. Clearly, there's a component of disappointment to that, but that's just ridiculous. I mean, this is their jobs, and they're obviously just either oblivious or just ignoring what's right in front of them. What is that? That's indifferent to an actual metric, empirical data of the price performance of the asset over a long period of time. So unless the story changes, there's no rational reason to take action. As I said, today's title, Fundamentals Tell You Where to Look, Technicals Tell You When. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Mark's in the house, like Neo plugged in. I try my best. Crypto Chick, always a pleasure. Matt's in the house. Aloha. Lidge, good morning. Davor, yo. Captain Weber, always a pleasure. See if there's any Twitter commentary I could talk about. Yeah, so I've been watching Bitcoin all morning. Um, we've been talking about this for the last couple of days. We've been bottomed on the daily. Um, And the 4 hour, we were in the symmetrical triangle last night, and we were pushing down. We were pushing down. So this price action this morning is nothing that's out of the expectation. It was pushing down. Probably, if you were really fearful, you have a lot of fear, uncertainty, and doubt. The push below the trend support, someone would have exited over there, and then they'd be like, "Oh, it's going to go back in," and it went back into trend, and then they're going all over the place. So that's just not the way to make decisions, in my opinion. That's not the way I make decisions. And I'm going to pull up the Kyber chart shortly, and that's probably going to give you the best insight into my decision making process with regard to value allocation. Now, this is what I saw all morning. For the last 4 hours, we had this candle right here where my mouse is, the red candle, wicking below the 200 EMA, wicking below the 200 SMA. And then you have a green candle starting to wick up. The second that candle ticked over on the 4 hour, the algos kicked in. The algo saw that the 4 hour close was pretty much a full mean regression. So we had a mean regression. Obviously, if we're at a mean regression on the 4 hour, we're way below the long term moving averages for the 1, 3, 5, 15, 30, and hourly. And we've gone up to the 4 hour. A mean regression is an overwhelmingly healthy uh, price action or a healthy occurrence. It's a reset. It's a shaking off of the weak hands. It's um it's a transfer of value to weak hands to strong hands. We all know BlackRock and is interested and Grayscale and all the players are accumulating and we know the story. So fundamentals tell you where to look, technicals tell you when. The technicals, what I noticed with the price action, even dipping down below the symmetrical triangle, the micro symmetrical triangle, the price action was buoyant. It was pushing up. It would go down and push up, go down, push up. And that's what it did all morning. That's just not a bearish trend. A bearish trend is when you wick down and it's like, what the hell is it doing? This wasn't like a buy side liquidity crisis where there was no buyers and it was just sellers. And that's what a wick like this is. And then someone sees a dip and they just buy it all up. So this was a very liquid market to see price action where it's a slow tick down and a slow tick up for like 8 hours all morning. And that's a healthy market. That's what you don't see in equities. What you see in equities right now is straight up. It's vertical shit. And this is not a healthy wick down. There's a liquidity issue in the market where there was someone selling way more than the amount of buyers that were available. So the liquidity was not balanced. What you want to see is exactly what's occurring. And, there's great reason to suggest, and that's all technicals do, is suggest that you're going to have appreciative price action from here. Look, you're sitting on the 200 SMA. The algos and humans looking at this, those are the ones who are making the markets. And a full mean regression on the 4 hour in a bull market for Bitcoin, considering the macroeconomic landscape, whether it goes down or not, this is significant. That's a big deal. After a massive rip to 40K, a full 4 hour mean regression, says Plan B must be sitting back saying, "Muhahaha, muhahaha." This is incredible. This is like that double rip he was talking about. You can't just go straight up. You're going to have more sellers. Sellers are going to be taking profit because it went vertical. What you want is a healthy grind. So, yeah, clearly we got ahead of ourselves, and look what happened. You have a significant deviation from the mean. It got overextended significantly. It pushed back down, a full mean regression. Mean regression is the tendency and just a natural phenomena. It's like Newtonian physics, gravity. Things get pulled towards the mean. Dare we pull up stuff like this? Which, don't get me wrong, I love the company. But now we go out to the daily chart. Yeah, okay. So it's at 849 and the mean regression is 50% to the downside. And dare we go out to the weekly, mean regression is 184. It's like 80% to the downside. I mean, obviously, we do that with BTC USD. So look, we're at a mean regression on the 4 hour, but look at the loftiness. Here, let's go. Let's do this. Let's check this out. I want to go back to Tesla for a second. So we just had a 4 hour mean regression, and folks are saying Bitcoin's dead. The gold bulls are saying, "We told you so. We told you so." We had what's 30 minutes. Let's go to the 4 hour. When the fuck is the last time we had a 4 hour mean regression on Tesla? These people are out of their minds that are calling Bitcoin there's volatility to the upside and the downside, but they're crazy. Look at this god darn, look how much it has to come down for a mean regression. You know what this would do to the market if you saw a 200 point give or take drop? You know what I'll do to retail investors and the participants? Clearly, there's very different participants in the Bitcoin space. The small players, the retail traders doing a tenth of a Bitcoin, a hundredth of a Bitcoin. Those people don't move markets. It's the large participants. And clearly, you could say there's larger participants now that Tesla's been added to the S&P 500, but we haven't had a full mean regression since November, and that's the sign of a healthy market. It goes up, it deviates from the long-term moving average, it falls back down to the long-term moving average, and then it continues. So, so Tesla would be healthy if it pulled the 4-hour mean regression, and then sure, the 200 EMA has a significant incline and it keeps grinding up. But then the risk is once you do a 4-hour mean regression, that it pulls back down to the longer term moving averages, and that's where the whole macroeconomic landscape comes into the picture. Market cap to GDP of 190%, and Bitcoin market cap to GDP is like zero. So, and then obviously other factors. Uh, QE and fiscal and stimulus and forex and obviously the fiat around the world and the central banks around the world and what they're doing, and the digital yuan is just completely, I think, under talked about in its significance, and how it's going to affect the macroeconomic landscape. And the Swiss CBDC, which they're being very aggressive with, which is I think driving Swiss fiat up. I think the people around the world are excited to see what MMT with a digital asset, with a central bank having, there's no restrictions, no limits on a central bank being able to issue credit, extend leverage, or accept collateral for debt positions. So yeah, it's kind of unfortunate, and that, I'm not going to dive into that, but it's scary because no one's really tried MMT where the central bank. It's all banking. There's banks around the world, and historically, the central banks had fiscal limits and caps and budget ceilings and debt ceilings. Yeah, but and I think that's they're blowing through it. It's gone. So it's basically unlimited. It's fiat, where there's an unlimited supply, and they're gonna play the MMT game, which is an entire philosophy. You could check it out on Wikipedia. Let's go back to BTC USD and see if there's anything else I could talk about. Let's check the stream real quick too. Uh, Jaforka. I don't know how to say. But hello, what do you think about tokens representing BTC hash rate? That's quite interesting. No doubt, that's a synthetic. Not a derivative, but it's a synthetic asset. That's interesting. Well, in theory, BTC hash rate has historically been a driving force or a precursor to Bitcoin price appreciation. As the BTC hash rate goes up, that means there's more activity in the network, more consumption, more adoption, and all those fancy characteristics. I expect BTC hash rate to just continue to go up. So, in theory, should be a price appreciative asset. Bam. Captain Weber hooking it up. Thank you very much, my brother. I appreciate that. Heirloom, hello. How are you? Pellets in the house. I'm okay. I'm feeling much better today. Oh, that was a ridiculous couple of days. Ridiculous couple of days. Sick as a dog. Let's zoom into the 4-hour real quick. Let's keep an eye on it. Zoom in. So obviously, there looks like there's a bit of weakness pushing back below the 200 SMA. So it is what it is. I'm not. There's no such thing as saying it will go up. I tweeted shortly ago there's significant confluence that suggests this is going to wick down and push back up against the 200 SMA, hopefully the 200 EMA. But there's significant support to the downside. You got price action support here. It's a serious price action support, and you got price action support down to 27,000 and change. And obviously, there's no 200 there's no EMAs or SMAs below, so you got to look further out for price action support if we fall to the downside of those supports. Clearly, if we start to talk about the daily chart, now that's a story change. If we fall through, I'd argue this bottom price action support at 27,000. Here there's significant support here. Horizontal line. I mean, clearly there's a lot of price action there. But you're talking about a significant dip to the downside. If you fall through 27, you're probably heading towards 22, 23. And now you're getting really close to the 200 SMA. And you might as well just you could probably exit for a bit. I just for personally, my sentiment is I don't care. I've been in this since much lower price points, and it's just I know where it's going in the future. It's not even something that I think about too much about where it's going. I enjoy looking at the daily technicals. I find it fascinating. I find it a story, and I like telling that story. And the biggest story I see right here is there's significant confluence suggesting upside from here. You're completely oversold on the Stoke. You're not oversold on the MFI and RSI, which is gives you reason to think that you could have further downside price action. But look at the oscillators on the 4 hour. MFI is completely oversold. Look what happens when MFI is completely oversold. Let's zoom out. When's the last time you saw MFI that low? Here, there's an instance of MFI being that low. And that's the last time MFI was that oversold, and boop. That's a heck of a start of a run, and MFI didn't drop down since then. It didn't go below 20. It's pretty interesting. So either there's a story change in play, in which case you may make a rational decision to take some value off the table. But what are you protecting in value? Protecting US dollar value? Sit back and relax. Stop thinking about US dollar value. Was this money that you needed? If it was money that you needed, you shouldn't have invested it in the first place. You needed the cash. Now you're gambling. If this is for your future, this is a savings account, a retirement account, a growth account, a fuck the fiat account, fuck the US dollar account. Who cares? If this thing goes to 20 grand, does it really bother you? You need to think about these questions. Is it better just to relax and understand the big picture, dive into the fundamentals, really digest the world and the way money works and these countries and the games they play with their central bank fiats and the relationship between the countries? It's like an orchestrated um, an orchestrated debauchery of perverted financials. That's what it's become. That's an interesting way to put it. It's gross. It's absolutely gross what these people created. So this is the overwhelmingly most meaningful way to express exhaustion with the status quo system to the point where I don't care if it goes down to the 20K. I have no interest in dollars. What I want is to have nothing to do with dollars. I want something to be different. And if this isn't something different, then that is just disappointment. Then the world has a problem that doesn't have a solution because fiat's not the solution. Central bank digital currencies aren't a solution because they're just going to be even more perverted with the goal that MMT is going to be with regard to the debasement of the value of the fiat that they're creating. So the only rational argument you could have is if there's a story shift, a significant story shift over the long term. That's why you also have a physical gold position. Then you're covered. Jim Rickards thinks gold's going to 15,000, more probably, especially if they're going full on MMT and doing crazy stuff with and into debt jubilees and resets and all these financial games. It's going to debase the crap out of the value of fiat, and it's going to blow the roof off precious metal asset valuations. So this is where diversification comes in. This is where you don't go all in, never spread too thin. Can't just be in the crypto space. There's some wonderful opportunities in the equity space. I hint on Twitter every now and then about the battery metals miners, which are rip roaring. I got a 7-bagger, a 6-bagger, which is 700%, 600%, 400, 500. They're all over the place. It's just people are investing in Tesla, getting a 10x on their money. I think it's eight times 5, 8, 16, 20, 45. Okay, so let's say it was at 300, so it's like 150% on your money. 1,500% of your money. So Tesla ripped 1,500% from like $300 pre-split to $4,500 pre-split at $800 post-split. So that's a lot. But they're investing now still, and that's the problem. Past performance does not indicate future price action. So all the people investing in Tesla at these ridiculously inflated prices compared to battery metals miners, what Tesla is literally entering into what's called offtake agreements, and they're literally the miners are literally cannibalizing each other. They're consuming each other, forming groups and buying out. It's just literally like a battery metals arms race. If you want, you can follow Simon Moores on Twitter. There's like 186 battery mega factories, like bigger than Tesla's Nevada battery mega factory. And all these folks are cramming into Tesla and whatever, all these ridiculously valued tech stocks. Meanwhile, how the fuck are they going to get the batteries? Oh, you got to mine this shit out of the ground? Now, the interesting thing is, I've talked about this every now and then. I've been in battery metal miners since like 2016. I was early. There's very little difference between being early and being wrong. And it took years for these assets to start having decent price action. So it's nice and refreshing to see hundreds and hundreds of percent gains on assets that have been bleeding over the last 4-5 years. Hit the stream and see who's talking. Igor's in the house. Hello, Noah. Are you familiar with Market Sniper? He's also good with expressing his thoughts in an interesting way. I'll take a look. You're very welcome. I'm more than happy. I enjoy talking and expressing my ideas, and I hope it helps. It's the whole point of this show. Pellets, what if you had to explain DeFi to someone who has never heard about it, asking you because of your explanation capacity? Well, unfortunately, you first have to have a person digest and accept the story with digital assets, and you start with Bitcoin. Uh, People that don't have the vast majority of the population has no experience with investing. They live in a fiat world, and you first really need to get through to them that, like what Robert Kiyosaki talks about, it is impossible to retire. It is impossible to save for college. It is impossible to get ahead. And you could be dramatic, and it is impossible to win saving dollars or saving fiat in any country on an average paying job. If you're making 50 grand in the United States or whatever it is in the respective fiat currency, you will not achieve anything considering inflation, considering period inflation. And frankly, the inflation of asset prices, the inflation of college tuition, the inflation of whatever asset or market you want to apply inflation to, it is pretty much mathematically guaranteed that saving fiat will result in losing. Now that's the way you probably could approach the conversation. And then you could say, do you really want to be a loser? And that's the dramatic approach. And then you start talking about the rational statement that if cash is guaranteed to lose, there's 100% chance that next year you will have 12% less money than you did the year before because of fiat's debasement, and that's from the chapwoodindex.com. Then the next step for a person to digest is you have to allocate that value to other things. There's no question about it. To not lose, you cannot hold your value in cash, so a savings account. And that's the whole point. A savings account is different than a checking account. A checking account is used for paying bills. You have like 5 grand in a checking account, and your monthly expenses are $1,000, and you could cover 5 months worth of expenses. You lose a job, you're out of work for 2 months. You got enough money to pay your bills for 5 months. So that's the purpose of a checking account, to cover your overhead. But your savings account, so you need to compartmentalize the handling and management of finances. So the portion of funds that you've accumulated for purposes that have a time horizon greater than the short term, greater than 5 months, greater than a year, greater than 5 years, need to be applied to assets, not dollars, not fiat. You'll just lose your money. Period. That's just what the system is designed to do. So then the conversation leads into, oh, what am I going to do? What am I going to buy? And then you have to explain to them, you're not buying anything. When you buy something, you're consuming it. It gets depreciated. You buy a car, it depreciates. It loses the value. You buy food, you eat it. The value's gone. You shit it out, literally. So you're not buying gold, you're not buying silver, you're not buying a stock. Warren Buffett talks about buying a stock as you're literally owning a portion of the company. That's true. So you tell someone, do you want to own a little bit of this company? You're not buying it. You're not buying anything. What you're doing is you're going to become an owner of this company and have access to a revenue stream via REITs, and you're going to get monthly income. And this, you could talk about this angle with regard to DeFi, because that's pretty much what DeFi is, a source of revenue. But that's the first approach. Got to get out of fiat. It will lose, guaranteed. The question and conversation then becomes, where do you apply value to? And now you have the conversation of, don't go all in, never spread too thin. Fundamental analysis tells you what to look at. Technicals tell you when to look, and spread across different markets. Should have a little bit of gold, should have a little bit of silver. I think the gold bugs will all talk about the gold miners, silver miners, gold streamers, silver streamers. I personally think the battery metals are going to be massive over the next 10 years. You got Volkswagen pouring $50 billion into trying to compete with Tesla. And come on, the writing's on the wall. And do you know how much battery metals, lithium, nickel, cobalt, and graphite they're going to need over the next 10 years to compete with Tesla? And Tesla, just to achieve its targets, they're going to need a huge amount. So you're not looking at those types of assets in a time horizon of weeks. You're probably looking at assets like that in a time horizon of 5 to 10 years, where the price action today doesn't mean much. It's nice to see 5, 6, 700% gains in the assets when I take a peek, but 5 to 10 years, when you're talking about 10,000% gains, come on, 5 to 10 years time horizon, right about now doesn't mean much. So this type of concept is much more volatile in the crypto space. There's more volatility. It goes up and down faster. But the same concepts apply. Time horizon. Don't go all in. Don't spread too thin. Fundamentals tell you where to look. Technicals tell you when to look. These are all critical conversation uh, components. And I know it's a hard conversation, but that's why I talk about these concepts and these topics. And you got to start somewhere, and that's the most important thing. You got to start, and you got to move forward. You're at step 0. You go to step 1. If you have questions, you can ask me. You ask other people on Twitter. You figure out how to get to step 2, and you figure out how to get to step 3, and then you're learning and growing and making better and better decisions. And that's the way this shit works. The only losing play is just operating in a fiat world. It's guaranteed to lose, and it's disheartening and miserable to think that so many people just are programmed to work 9 to 5 at Walmart for $10. You know, they have the $15 minimum wage thing. $15. No, I'm sorry. And then they have the balls and the nerve to say spend $100,000 on debt to go to college to get a $50,000 a year job where you're making $60 an hour, and you have to get into debt for $100,000 for $50,000 a year. Oh my God, Robert Kiyosaki is a great person to listen to. George Gammon is quite technical. He'll teach you about a lot of the stuff that I talk about, but Robert Kiyosaki will give you that very high level conversation to attempt to deprogram the uninitiated, deprogram the people that operate solely in a fiat world. So that's a great place to start. His videos are on YouTube, and you could hopefully, I like to think of it unfortunately or just realistically as uh, you got to save people. You have to save them. I mean, they're drowning. The metaphor is apt. It's a correct metaphor. If you're operating a fiat world, they're drowning. So there's someone a life raft and help them. Um, what am I missing? So that was a good answer, Pellets. I like that content. It's good stuff. Let me know if you have any questions about how to start a conversation like this with other persons. White Wolf, hey Noah, can you repeat the name you mentioned with the hundreds of battery metals miners? Yeah, Simon Moore's. Here, take a look at Simon Moore's. Simon Moore's. You mean literally? I've talked about crypto this entire channel. This is an entire damn channel. This would be an entire channel to talk about battery metal miners. This goes back years, and this is global. There is companies in so many. It's basically Australia, Canada, South America, but they're all over the world. You got cobalt in Australia, you got lithium in Australia, you got graphite in Africa, you got graphite in America, you got some cobalt in America, you got a massive load of lithium up in Canada, you got the lithium, the brines down in South America. But what you really want to look is the hard rock assets, not brines. And what's interesting, Lithium Americas is up 700 and change percent. That's because they just got their permit for the Nevada plant, but I think they're going to do brine. So brine is just ridiculous. What you really want to look into is the hard rock assets because that's more scalable. It's nearly impossible to scale the brine plays. So the hard rock assets are going to come out of Canada and Australia. See what I'm saying? Yeah, I talk about crypto all the time, and you guys are getting me to talk a little bit about how to diversify. Just saying, interesting stuff. Pellets, inspiring as always. Thank you, thank you. You inspire me by asking these questions because I think about this stuff, but you guys get me to express it and organize my thoughts and better digest them as always. And what are technicals telling you about altcoins? You guys know the altcoins I think are ridiculous. I mean, Ren is at 61 cents. I mean, it was at like 75 cents. Who gives a shit? I was in at 6 cents. It's hard to say. Increasingly volatile. The same factors apply as Bitcoin. So, here, let's look at Kyber for a second. This is a great example. Check this out. So Kyber just ripped to the upside, but look at that wick. Look at that. So somebody's like, "Oh my God, it's up here." Check this out. So this is, I guarantee you, this is what happened. Someone saw this wick and they're like on Twitter and they're like, "Holy crap, it's up 30%." They buy it and holy crap, it's down. It's down. Yeah, they just lost 10% of their money. This is I cue the South Park video, and bam, it's gone. It's brutal, man. And this is exactly what I was talking about. So check it out. This is what you do. You don't get in here. This is not where you get in. What you want to do is wait for it to rip to the upside. Price action. Where is that? Right about there. You wait for a 60% rip to the upside. That's when I buy. I buy when they shit rip 60%, even more, because then we're going to go like this. You break to the upside, it retests, and then you want a higher high. So I'm not even waiting for a 60% to the upside. I will buy when this thing rips 80% to the upside from here. That's when my eye is drawn to this asset. Now, you really need to hit these long-term trend lines to see the story changing, because guess what? This looks bullish. Dare we look at the macro picture? All right, maybe not so bullish. So that's the point. Hit those long-term trend lines. there's no weeklies because it's only a 2 3 year old asset. So you look at the 200 EMA on the daily. It's a meaningful moving average. Now, how many assets, Ren? A bunch of assets at price discovery mode, where it's above a Bitcoin. Once it broke 20,000, it's in price discovery mode because there's no historical precedence for potential future price action with regard to supports and resistances below the current price point. Um, but here there is, and that's why you look for a break to the upside. So the story changes back to bullish, um, and you want it. You want that story to change, and then you ride it in the price discovery mode, and you sail off on a yacht with the sun going down on the horizon, saying you bought Kyber when it was whatever it's at 20 cents. Who knows? And it's at $10. And Synthetics was literally I got into Synthetics at 70 cents in March last year. I don't have the position I had. I have a 2%, I think, of the position I had, and it's at $13. It was as high as $17. Think I care if it goes from $17 to $13, knowing that it came from a price point of 70 cents? Does anyone? And that this comes back to like the macro narrative of Bitcoin having an annualized appreciation rate of 200% a year over the course of 10 years. That's the gold stuff I talked about at the beginning of the stream. A couple more questions and we'll wrap this thing up. Igor Klaus Schwab. Oh my God, Klaus Schwab. Klaus. That's MMT. Yeah, owning shares stay. So he wants the Great Reset. He wanted you're not going to own everything, but you're going to have everything you want. And some of that incredibly 1984 type of commercials that we've seen lately. So they're talking about MMT. I mean, the holy grail of what they're shooting for is everyone has a digital currency. They could print whatever they want. Maybe there won't be taxes, but the point is, they're able to force monetary velocity and they're able to control GDP. And that's what modern monetary theory is. And in theory, it sounds great because they could give everyone $2,000 a month. They could give everyone $4,000 a month and say, if you don't spend that $4,000 by the end of the month, you lose it. So everyone in the damn country is going to spend $4,000 a month. So that's going to cause monetary, but the velocity of money, the buying and selling of goods and services, is going to create business and encourage people to borrow money and lend money and all that fancy economic jazz. And then on the other hand, then the government has unlimited money, so they can employ people. And they can employ everyone, literally the whole country. They can just give people jobs. So the whole trick is if you start giving people money, that creates a supply and demand imbalance. Now you have more demand than supply, and that's where the goods and services inflation comes from. But if the government forces companies to ramp GDP with manufacturing and goods and services creation, now the supply meets the demand, and you're able to forcibly control the supply and demand balance. So bear in mind, it sounds great in principle, but it's extraordinary government control that's giving the government the ultimate power to literally control every aspect of the monetary system, as well as the manufacturing, employment system. It's everything. It's socialism. Not that socialism is horrible, but that's a whole other topic. We got social programs all over the place, safety nets, and they help a lot of people. But so that's the whole point, and that's the whole MMT. That's the whole stimulus. That's the whole digital currency story, and that's where it's heading. I mean, China is just here's the interesting observation. We'll end soon. Tesla forced the entire automotive industry to react and respond. They single-handedly caused the biggest disruption in the automotive industry in 100 years. That was it. There's no question about it. China pushing out their digital yuan and their plan with the Belt Road, um, they're going to single-handedly force the entire world to respond with digital currencies, and China's going to go MMT, and every country around the world is going to be forced to respond. Now, it'll likely take longer than Tesla. Tesla took about 2000. 2002? No, 2012. Sorry, that's when the first Model S came out and it started getting traction. But the digital yuan, it could take longer because you're talking about a massive global population. You're talking about countries and sovereigns and all that complex bullshit with the country governments. But the point is, they're forcing everyone to respond. And Captain Weber knows that story with the BSN and IrisNet. And if you all you have to do is look up on Twitter the BSN, and that's the Chinese National Blockchain Initiative. That's like the United States having a United States Department of Blockchain Technology and Innovation. Okay, they're on Twitter. That's what the BSN is. Imagine a United States Department of Blockchain Technology, whatever. That's what it is. They're they're causing a chain reaction of people with an emotional level that are in these governments to have to respond, going to respond and react. I haven't looked at Bao. It's probably new. I'm not too interested in new. If Kyber lets people provide liquidity, they have done better. Yeah, it's complicated. I agree in some regards, and that's why the other AMMs have outperformed significantly. But Kyber has some of the best tokenomics in the entire crypto space. They're a deflationary protocol where transaction fees go to burning a fixed supply asset, so it's a decreasing supply asset. It's deflationary, but they also have an incentivized supply disruption component, which is much further deflationary, which is why Synthetics is so successful. Synthetics has an incentivized supply disruption mechanism with an inflationary principle. Kyber has a deflationary principle with incentivized supply disruption. Synthetics has an inflationary principle with incentivized supply disruption. It's just fascinating tokenomics. Fascinating. Let's wrap it up. Bow, interesting. I don't know pellets. I don't know anything about it. Igor, so now it's 21, 50-year plan is ready to roll. That's basically what's going on. You got to think long terms, but you got to categorize this shit. You got 50-year plans. You got 20-year. The time horizons. You got 10-year, 10-year time horizon. You know what's going to happen with electric cars. It's written all over the wall. They're going to be cheaper than gas. You have no maintenance whatsoever. They're a freaking rocket ship. A rocket ship. Yeah, you got a V8, a Hemi, and a 800 horsepower. Meanwhile, you got a Model S, the Performance Series, and bye-bye, you're gone. You're done. So, and you never have to. You literally go home and you charge your car like you do a cell phone. It's going to seem so ludicrous that we hung on to gas cars for so long in the face of the obvious. So that's the name of the game, ladies and gentlemen. I'm going to keep an eye on Bitcoin. I'll post on Twitter. I see a lot of lovely assets, but we'll talk about that tomorrow. Thursday, 12:11 p.m., January 21st. Thank you, everyone, for joining. It's always a pleasure. I look forward to doing this again tomorrow. I wish everyone a wonderful day. 21 people in the stream, 8 likes. Everyone smack that thumbs up. Tell everyone to subscribe. Y'all have a wonderful day now. Peace.